Well, the Treasury Department will penalize 3 of the largest mortgage servicers over the way that they handled foreclosures. Those banks are Wells Fargo, Bank of America, and JPMorgan Chase. Tim Massad is the acting Assistant Treasury Secretary for Financial Stability. He joins us live from our Washington bureau. Welcome to In Business. Tell me.
Thank you.
We saw about $24 million received by some of these banks for these servicings last month. You're withholding the payments to them now. Why now?
Well, this is really the next step in a process, not a first step. Our focus is disclosing information about how they're doing, which we've been doing all along. We've had a compliance operation that's been reviewing what the banks are doing and getting them to improve their performance since day one, and we've been reporting on that. We're expanding that reporting today. But, you know, when we started this program 2 years ago, the banks simply weren't equipped to deal with this crisis. They didn't have the people or the procedures or the systems to do it. And we've been in their shops really since day one, making them take remedial action. They've now built operations that are reaching out to people, but there's need for further improvements, and that's what this is about.
You know, we've had Bank of America's CEO out there saying, you know, even after modification, frankly, some of these homes, a lot of them are still going to have to be foreclosed on simply because of financial reality. Do you think that the HAMP program has been successful?
Oh, certainly it has. And when we look at what we call the redefault rate for HAMP, it's actually very low. And what that measures is once someone enters a permanent...
that goal you had of 3 million people that you wanted to prevent.
Well, let's remember, when we launched this program, no one really knew how many people we could reach. Nothing had been done to address the housing crisis. And, you know, people have said, well, you're not really going to get any mortgage modifications in this, or it's going to be very difficult. In fact, we're continuing to get 25,000 to 30,000 every month. We also have other programs that are available to people who need assistance, particularly unemployed people.
I think our D.C. reporter is standing by.
Yeah, Tim, it's Lizzie O'Leary. You told us yesterday on the conference call that you don't have the power to impose fines. You essentially only have the power to publicize this and withhold these financial incentives. That doesn't give you much leverage over the banks, does it? Well,
let's remember, Congress gave us the authority to do a voluntary program. In other words, it's based on a contract. The law does not mandate the banks to modify mortgages. So we got servicers to voluntarily agree to do this, to enter into a contract in which we pay financial incentives. We're using all the remedies we have, and I think the most powerful one really is disclosure and publication. And as I say, I think, you know, the banks have made a lot of steps since the beginning of this crisis, when they really had no operation on the ground to do this. They were used to collecting interest payments on performing mortgages. When you have people who need assistance, who are in default, you need a much different operation. So that's why we've been in their shops from day one, getting them to improve. And what we did yesterday was to provide even more data. And I think we're really setting benchmarks for the whole industry. You know, there's been no reporting on mortgage modifications before our program came along. So what we've done now is really set some standards that I think can serve as a benchmark for the whole industry.
Let me ask you about some of those standards, because we've been talking to analysts who've been looking at the question of you know, impact on housing overall. And they point out 50% of distressed borrowers have second mortgages. And one of the criticisms of the HAMP program is that it doesn't really adequately address the entire debt burden of the borrower, and that there's a lag time between when you modify the first loan and the second there. So what needs to change in terms of the actual program itself, putting the banks aside here?
Yeah, no, that's a good question, you know, and we have a program that addresses that. But, you know, the fundamental problem was there was no system in this country for matching the first lien to the second lien. In other words, where you had a first mortgage, you didn't know who had the second mortgage, and it was very hard to find out. So we needed a matching system so that we could then say, if we've modified the first mortgage, then the bank that holds the second is required under our program to modify the second if it's eligible. So we got the banks to build that system, but it's still a tough problem and one that we're working on.
I have a question here about reports about possible fines about foreclosure practices at Ally Financial. There are reports today that may be why the company had to delay their share offering. What can you tell us about that?
Well, they're still getting ready for their share offering. You know, when you have an IPO, there's a lot that you have to do to prepare for it. You have to clear it with the Securities and Exchange Commission. They are a regulated institution too, so they have to work with their regulators. Obviously, the markets have been difficult, so they're continuing to work toward it, and we'll have announcements when there is something to announce.
Well, Treasury has that 74% stake, but can you tell us that they are not facing that probe, not facing fines? Is that not?
Oh, no. I think, well, in terms of the foreclosure settlement discussion, obviously, Ally is one of the servicers that you know, is one of the largest servicers. Those discussions on a possible settlement of foreclosure irregularities are ongoing. You know, Ally was the first bank to publicize, to admit that there were foreclosure irregularities. It came forward and said that, which is what started all of this. So those discussions are ongoing. It would be inappropriate for me to comment, and I frankly don't know where those will end up.
All right. Well, thank you so much for your time today, sir. Appreciate you explaining.
You're welcome. Thank you.
We're going to